Right, in this videos, I'm going to briefly explain Homework 4, the financial reporting for federal government agency. You know, for federal government agencies, we're going to keep two tracks of accounting work. One is for the budgetary work, and the other is for the reporting purposes, which is known as proprietary accounting. All right, so we have a bunch of transactions for this agency, and we're going to report the statement by the end of October. So for each transactions, we're going to record both the budgetary and the proprietary journal entries. However, for reporting purposes, we're going to only use the journal entries from the proprietary part, and the budgetary part is for internal control purposes, for budgetary purposes. So you don't have to record all the budgetary journal entries, but if you could, that's better. So let's go through these transactions. The first, October 1st, right, the agency received appropriation warrant from the Department of Treasury for $100. All right, so in the budgetary accounting, we're going to record the receipt of the appropriations, right? So we debit appropriations 100 and credit unapportioned. It's unapportioned until the same day the entire appropriation 100 was apportioned by the OMB. Okay? So we're going to debit unapportioned 100 and credit apportionment 100. Right? So this is for the budgetary accounting work. And for the proprietary work, we also need to record, right, the appropriations. Basically, it's like we have a wallet in the Treasury Department, right? We're going to record the fund available, so we could debit the fund balance with Treasury, 100. And then we're going to credit the unexpended appropriations. $100. So it's just like the this is an asset we have, this is an equity we have, right? Then the apportion, we don't have to record anything in the proprietary work. Then the same day, right, the department allot $50 to the agency. Right? It's for control purposes. So later they're going to allot the other 50. Again, in the budgetary accounting work, we're going to record this allotment. Basically, we debit apportionment 50 and the credit allotment 50, which means the agency now has 50 to spend. But for the proprietary, we don't have to record because we do not spend anything yet, right? Then October the 4th, the agency ordered equipment at an estimated cost of $20. So this time, this agency, right, pledged or has is obligated, right, to order $20 equipment. So in the budgetary work, it's going to reduce the allotment, debit allotment, and we're going to credit undelivered orders, 20. But in proprietary work, we didn't receive anything yet, right? And there's no journal entry. Then October the 14th, the equipment arrived and the invoice 22, which is okay because the contract allows a 10% cost overrun. So in the budgetary accounting work, we're gonna reduce the undelivered goods orders 20. Right, we're gonna add additional allotment, debit allotment 2, and then credit delivered orders 22. Right, delivered orders now is 22. And for the proprietary work, we're gonna also record a journal entry because we received the equipment and the gut invoice, so we have an obligation or liability to record. So October 14th, we're going to debit the PP assets, equipment, right, the total amount 22, and we're going to record account payables 22. Right? At the same time, we're going to record the record this with our fund, right? Because we have spent, it's expanded. Appropriation is being used in this case. So under the proprietary work, we're going to debit the unexpended appropriations, which is this one, right? Unexpended appropriations, 22. And now it becomes expanded. Expanded appropriation 22. Next we have October 24th. The agency sent disbursement schedules to the Treasury requesting payment. So they're gonna request the Treasury to pay equipment 22, right? And the department salary, agency salary 10, and the utility bill 8. So the total request will be $40. We'll request $40 payment. So the budgetary work, the $22, the equipment has been recorded already, right? So the additional budgetary work we're going to record is the $10 salary, $8 utilities, $18. So we're going to reduce $18 from the allotment, debit allotment 18, and credit delivered orders 18. Right, that's for the budgetary journal entry. And for the proprietary one, we also need to record a journal entry. Right, the first journal entry, we're going to record the requests itself, right? So it's going to request the Treasury to pay 40. And meanwhile, we're going to record the debit side. The debit side, we're going to increase the $10 salary expense, right? And $8 utility expense. And those are program costs. So we debit program costs. Right, program cost, to be more specific, we have salary, that is 10, right? And utility, $8. The total program cost 18. And also we're going to reduce our account payables, which is from October 14th, 22. And we credit the request of payment, the disbursement in transit, $40. And since we have another $18, right, will be paid, and we have to use our appropriations, just like we did here, right? We're gonna recognize the usage of the appropriation. So we debit unexpended appropriation 18, and the credit expanded appropriation 18. All right. In October 27th, the Treasury noticed the agency that it has been paid. Right. So the budgetary accounting, we're gonna record, right, the payment. Basically, we debit delivered goods, unpaid. All the previously delivered goods are unpaid, 40, and credit delivered goods paid, 40. Right. And in the proprietary work, we also need to record the payment, right? Because it was a disbursement in transit. Now we're gonna reduce our wallet, the fund balance, right? So we debit the disbursement in transit, 40, and we're gonna reduce our wallet, the fund balance. All right. Then October 21st, agency recorded depreciation $2 on the equipment. It has nothing to do with the budgetary work because it's accrual accounting, right? So budgetary work, we don't record this depreciation. But for the proprietary work, we're gonna record this depreciation, right? The $2 is expense, a program expense, depreciation, right? Debit program. That's October 31st. Program cost, depreciation, $2, and the credit, the accumulated depreciation, $2. And finally, the agency accrued $3 unpaid salaries for October. So according to the budgetary accountings, because this salary has employee has worked, so we have to actually use the current period's budget, right, to keep that part, and so we can pay in the future period. So we're gonna recognize the $3. So we debit allotment, we use our allotment, and the credit the delivered goods unpaid, $3. So we can pay in the future using this period's budget. We're going to also record that in the proprietary work, right? Because this is accrual accounting. So we're going to increase our program cost, right? Salary again, $3. And create a payable. The salary payable, $3. At the same time, we have to reduce our appropriation. We have did twice here, one here, and we're going to do it again. So we're going to debit unexpended appropriation, $3, and then credit expended appropriation, $3. Right? All the journal entries, we have done all the journal entries. The next, we're going to report the financial statement. Right, next, we're going to do the financial statement. All right, to save some space. So the first, we're going to do the balance sheet. right? We're going to report all the assets, liabilities, and the net position, right? Net position. So it's not difficult to identify the assets we have, right? We have a wallet in the treasury, and that's a fund balance. Start with 100, then we only paid once 40. So with a wallet, we should have 60 left. Fund balance 60. And what else we have with assets? We purchased the PP assets, right? That's 22. But remember, we also did a depreciation right here. That's accumulated depreciation. So we're going to deduct that less the accumulated depreciation, $2. So for the PP assets, we should have net 20. So the total assets, we should have 80. Next is liabilities. Right? We look at all these journal entries. The only liability left probably will be this salary payable, because the this liability we have paid already. So that's we have the salary payable. That's 3. And finally is the net position part. In financial accounting, that's equity part, right? Financial positions, we have, or our equity, we have unexpended appropriations, right? So what's left with the treasury? And we just calculate that that's 100 less the 22 less 18, and finally we're gonna less 3. So what's left will be 57. And the final part is the cumulative results of operations. Right, for those format and accounts for reports, you can check the textbook. Right, we have a more formal reporting format and the account used. All right, so this recorder, the increase in our equity, right, or net positions from our spending. So all those costs are not going to increase our net position, but we do have an asset, which is the PP assets. We spent 22, but depreciated 2. So the net results will be 20, okay, left. So the net position, we have 77 plus liability 3, which is 80, equals the total assets 80. So we have done with the balance sheet. Okay. Next, we move to the statement of net cost. Right, the statement of net cost report all the cost. So what are costs we have? We have program cost, basically, right? Salary cost, we have right here $10 salary cost, plus we also accrued another 3, so that's 13, 10, and 3. That's going to be right? So that's 13. And we have utility. Utility, that's 8. And also we have the depreciation. It's also part of the program cost. That's 2. Right? So the net cost, if you add them together, that's 23. Okay, that's very straightforward. Next, we move to the statement of change in net position. Well, basically, we can show the receive and the usage of the budgetary financing, and then the change in net position. Right. So, what is the budgetary financing? Or you can think of this as right. So the first, we're gonna record the appropriation used. Right? Appropriation used. You can check how much we have used our appropriations. Right, so we can check the 22, right? Used appropriations, then 18. Okay. And then 3. So appropriation use will be 43. Okay. And our net cost from the previous financial statement, we show that's 23. So net change from operations will be 20. So this becomes the $20, the cumulative results of operations. This is where it comes from. So the appropriation use can be think like a revenue, and this is expense. Because of that, net change is 20. Okay, but this is not all we have. We also have unexpended appropriations. Unexpended appropriations, right? We spend 43, so unexpended should be the rest. That's 57. Therefore, our net position, remember net position is 2 parts. We have the unexpended appropriations, and then we have the net change 20. That's 77. Right? We have that number in the balance sheet as well. All right. And finally, we have the statement of budgetary resources. Right, basically, we're going to show the budgetary resource and the usage of the budgetary. Right, the budgetary resources. The only resources we have is appropriation. That's 100. Then let's show the status of the 100 appropriations. Right, basically we spent 43, right, and 57 is left. So we're going to record that. New obligation, which we obligated, and some of them we have paid. The total obligation or total usage of the budget will be 43, right? And the rest is unused. They are apportioned, unexpired. And sometimes if you have something left and expired, you're going to report apportioned, expired, right? We don't have it. We don't have that. All right, this is the total budget resources and the status of those the appropriations. And finally, we report the cash payment. We call this outlay. Okay, how much we have paid actually, right? We only paid once, which is $40 we have paid. So the outlay will be 40. So you can compare the new obligations with outlays, which means we have $3 unpaid, which we will pay in the future period. All right, this is pretty much for the homework 4. The actual number will be different, but we have covered basically everything similar stuff in this simple version. Okay, hope it helps.